Welcome, everyone. Thank you so much to the executive board for having me today. Look, we are dealing with a totally unprecedented, highly volatile geopolitical energy landscape right now. And as your energy consultant, my goal today isn't just to read you the news. No, we're doing a deep, data-driven assessment to translate the wild market shifts of 2026 into actual, actionable intelligence for your portfolios. We are literally navigating a multipolar energy reality where the old rules of the market, well, they've basically been rewritten overnight. Okay, let's dive into this briefing. Our agenda for today is pretty straightforward. First, we'll start with a global energy risk overview. 2, the UAE OPEC shockwave. 3, the WEO 2025 transition challenges. 4, critical mineral supply choke points. And finally, number 5, portfolio risk and resilience. All right, Section 1, global energy risk overview. We're going to unpack the dual threats of immediate geopolitical shocks and long-term supply chain vulnerabilities. So let me give you the bottom line right up front. The global energy transition, it's currently being threatened from two completely different sides. We absolutely cannot look at these issues in a vacuum. On one hand, we've got acute, immediate crises, specifically the massive disruption of the Strait of Hormuz closure. But on the other hand, at the exact same time, we're dealing with deep, structural supply chain bottlenecks as the world tries to transition to renewable tech. These two massive forces are literally colliding as we speak. Moving on to Section 2, the UAE OPEC shockwave. Here, we'll analyze the impact of the Strait of Hormuz closure and the totally unprecedented fracturing of OPEC. So the crucial point is that we are witnessing the largest disruption to the world's energy supply since the 1970s. Following the closure of the Strait of Hormuz, we instantly lost about 10 million barrels per day of global oil supply. That is a massive, massive shortfall. And what happened? Brent crude absolutely surged, peaking at a staggering $126 a barrel. This isn't just a blip or a normal market fluctuation. It is a monumental financial shockwave that is fundamentally altering the baseline for global energy costs. And compounding this physical disruption is what I can only call a geopolitical earthquake. After 60 years, the United Arab Emirates made a shock exit from OPEC. It's essentially a high-stakes geopolitical divorce, and it really sets the stage for a bitter price war. The UAE is essentially ignoring the old quotas. They're looking to maximize production, potentially hitting up to 6 million barrels a day once shipping routes actually clear up, all to repair their war-ravaged economy. Meanwhile, you have Saudi Arabia. Historically, they're the ones who throttle supply to stabilize prices, right? But now? They are predicted to fight back with an absolute vengeance by aggressively discounting their crude just to capture market share, especially over in Asia. Now, this rivalry introduces some extremely severe, cascading economic consequences. We are talking about the largest global oil market disruption in history. We're looking at a 10 to 13% immediate price surge across all energy markets. Plus, there's widespread disruption to critical commodities, things like aluminum, fertilizer, even helium. And this creates a really hostile macroeconomic environment. Central banks are being forced to postpone interest rate cuts because of heightened stagflation risks, which is triggering a massive global bond market sell-off and pretty steep stock market declines across the board. Okay, Section 3, WEO 2025 Transition Challenges. Let's examine the structural shifts in the global energy system using the IEA's latest framework. So, having looked at the acute crisis, we really need to shift our focus to the long-term structural transition. And this brilliantly illustrates the complex backdrop we're dealing with. The newly released World Energy Outlook 2025 from the International Energy Agency dives deep into what they're calling the age of electricity. It really highlights that, while traditional fossil fuel risks might be peaking, the transition to clean energy brings its own set of incredibly profound security challenges that we are going to have to navigate. Let's actually break down these transition challenges. The IAE has mapped out some incredibly complex and honestly often conflicting market variables. Think about it. We have extreme geopolitical fragility coexisting with what will likely be subdued oil prices once the current crisis resolves. That leads to highly volatile capital allocation. Then, traditional fuel risks are now being paired with critical mineral vulnerabilities, creating severe supply chain choke points. And finally, you have rapid clean energy growth, which is fantastic, but it exposes massive grid vulnerabilities to increased cyber and physical threats. So the decisions you're making for your portfolios today, they are happening against this incredibly complex macroeconomic backdrop. Moving right along to Section 4, Critical Mineral Supply Choke Points. This is the hidden risk in the clean energy transition and a massive threat to national energy security. Now, what's really interesting about this slide is that this right here is the hidden risk of the whole clean energy transition. It's arguably the most alarming structural threat to national energy security that we identified in our assessment. According to the IEA, a single country, China, currently dominates 70% of the refining capacity for 19 out of 20 strategic energy-related minerals. Just think about that for a second. Copper, lithium, nickel, cobalt, rare earth elements. These are literally the building blocks of the future energy economy, and they are all bottlenecked through a near monopoly. The geopolitical vulnerability here is just immense. As the IEA explicitly warns, reliance on a small number of suppliers raises the risk of supply disruptions or economic coercion. And guys, we aren't just theorizing here. By late 2025, we already started seeing sweeping new export controls placed on heavy rare earth elements and critical battery components. Our entire energy transition relies on materials that have a dangerously concentrated supply chain. So let's translate that vulnerability into direct financial risk. If export controls or geopolitical tensions cause a tenfold surge in raw material prices, which, by the way, is something we have historically seen happen with rare earths, global average battery pack prices could instantly jump by 40 to 50%. That level of margin destruction, it drastically alters the valuation of every single clean energy and automotive asset currently sitting in your portfolio. Finally, Section 5, Portfolio Risk and Resilience. Let's talk about actionable intelligence for executive risk management and capital allocation. Okay, we've outlined the acute crises and the structural bottlenecks. Let's move to and see how this builds into actionable mitigation tactics. Here are 4 urgent policy and corporate actions required to insulate your portfolios. First up, build strategic reserves. And I don't just mean for oil, but for critical minerals too. Second, aggressively diversify your supply chains through global partnerships, because market forces alone are absolutely not going to fix this concentration. Third, establish multilateral governance for infrastructure protection, especially as energy becomes more of a weapon of statecraft. And fourth, deploy capital to enhance power grid flexibility and cyber resilience. So, I want to leave you with this thought. In an era where energy is explicitly being weaponized, whether that's through the physical blockade of the Strait of Hormuz or legislative restrictions on rare earth minerals, how exactly is your portfolio hedged against this multipolar energy reality? The baseline has officially changed, and the risks are coming from multiple fronts. It is absolutely time to critically evaluate your capital allocation and ensure your investments can actually weather this transition. Thank you all so much for your focus today. Let's get to work.